My name is Edie, and welcome back to Market Academy. Now, as you know, last week we kind of started just a deeper dive into the Elliott wave principle, and we started last week exploring, say, the depths of the impulse wave. Well, this week we're going to be focusing on the second type of motive wave pattern, and that is going to be the ending diagonal. And this is the ending diagonal right here. And again, moving forward, I'm going to try and keep on schedule week after week, but we're going to finish up as we move into January, taking a look at the zigzag, the flat, and of course the triangle. And I'm going to try and give you as much depth as possible because as many of you know who have been practicing the wave principle for any length of time, no, it's really not that simple. There's a lot of rules, there's a lot of guidelines. I think there's close to about 100 different rules and 100 different guidelines in total that actually govern wave development. So I'm going to do my best to kind of simplify everything for you to the sense that really that it gives you the meat and potatoes of it, that you have the mechanics of the wave principle so that you can say more confidently begin to apply the technique and the tool yourselves on your own to whatever market that you're looking at. So let's go ahead and get started and discuss the diagonal. Now the diagonal, we sometimes refer to it as an ending diagonal. This is what the pattern is. It's a 5-wave pattern, waves 1, 2, 3, 4, and 5. Now it has some differences, but also too some similarities to the impulse wave and also to corrective structure. For example, where within an impulse wave, and remember last week's analysis or last week's discussion, this is an impulse wave, waves 1, 2, 3, 4, 5. Notice there's no overlap between the substructure. Also, wave 1, wave 3, and wave 5, they will subdivide into 5 smaller waves because remember, again, going back to last week, the wave principle, these patterns that we discuss, they're fractal. They're fractal in nature, and for those of you who are not familiar with what a fractal is nothing more than a self-similar pattern independent of scale. So for example, if you're looking at 10 miles of coastline, it looks just the same as, say, 100 miles of coastline. But these patterns that we work with as Elliotticians form larger and also smaller versions of themselves. So this move here, this is the diagonal. Again, it's a 5-wave move. And its big distinction, two major distinctions. Number one, wave 4 must end in the price territory of wave 1. And I think basically in the research or in the body of knowledge that encompasses the wave principle, there might be one example where wave 4 did not end in the price territory of wave 1. But my advice is, stick to R.N. Elliott's original work. Wave 4 of a diagonal does indeed and must end in the price territory of wave 1. Because remember, the more, whenever you're looking at a pattern, the more it resembles the idealized version of that pattern. And just again, remember, the book I go to, my go-to book about the wave principle, and I always have a copy on my desk, is The Elliott Wave Principle by A.J. Frost and Robert Prechter. There's no other book out there that I think that I would recommend other than that book. So going back to the diagonal, wave 4 must end in the price territory of wave 1, in my opinion, okay? Again, I do believe there's an example in the book, Elliott Wave Principle by Frost and Prechter, where Bob has a diagonal, an example of a diagonal that did not end, where wave 4 did not end in the price territory of wave 1, but that's the exception. It's certainly not the rule. So if you're going to identify this pattern correctly, I recommend insisting on wave 4 ending in the price territory of wave 1. Now, also, a similarity between the 5-wave structure here, the ending diagonal, and the motive wave. Just as in a motive wave, in an impulse wave, wave 3 cannot be the shortest impulse of waves 1, 3, and 5. It doesn't have to be the longest, but it can never be the shortest. The same is applicable with a diagonal. Wave 3 is always going to be shorter than wave 1, and wave 5 is always going to be shorter than wave 3. Now, when it comes to, say, Thursday's lesson, I will show you a variation. It's called an expanding ending diagonal, in which case wave 3 is longer than wave 1, and wave 5 is longer than wave 3. Okay, but that's going to be one of the variations that we discuss on Thursday. But this is your core pattern. So again, it's similar to an impulse wave in that it has 5 waves. And again, wave 3 must be shorter than 1, wave 5 must be shorter than 3. That's where pretty much where the similarities kind of end, because each wave of a diagonal does not subdivide into 5 waves, it subdivides into 3 waves. So instead of within an impulse wave where you would have 5, 3, 5, 3, 5, within an ending diagonal, it is a 3, 3, 3, 3, 3 pattern, meaning wave 1 is a zigzag, wave 2 is a zigzag, wave 3 is a zigzag, wave 4 is a zigzag, and wave 5 is also too a zigzag. This begs the question, can wave 2 or wave 4 or wave 3 or wave 1, can any of these wave patterns be a flat? The answer is no. Okay, the only way you can have a flat pattern, expanded, irregular, running, it doesn't matter, is if it represents wave B of the larger zigzag, which makes up 1, 2, 3, 4, or 5. So, for example, you could have 5 waves up for wave A, an expanded flat in wave B, or a flat correction in B, and then a 5-wave move up in wave C, but that again would still be a zigzag, a 5, 3, 5 pattern. Each wave of a diagonal must be a zigzag, period, end of story. You must have overlap between 4 and 1, period, end of story. Now, the placement of the diagonal is very specific, just as, for example, the placement of a contracting triangle is very specific. A diagonal, again, sometimes referred to as an ending diagonal, can only occur in several or a very limited number of wave positions. You can have an ending diagonal in the wave 5 position of an impulse wave, and you can also have wave ending diagonal take the shape of wave C of a flat, or here's a flat over here, or wave C of a zigzag. So here are the places where an ending diagonal can occur. Again, period of end of story. So in other words, you cannot have an ending diagonal take the shape of wave 3 of an impulse wave. It just doesn't work that way. So remember, by definition, a diagonal is a terminating wave pattern, and it can only occur in the 5th wave position of an impulse wave, or as wave C of either a flat correction or a zigzag. Now, because it is referred to as a terminating wave, it basically lets you know that the larger pattern, the larger formation, is coming to an end. That's why diagonals are so, sought after, or it's such an exciting pattern. Because whenever the pattern does indeed terminate, it tends to give way to a sharp resolution back to beyond the origin of the pattern very, very quickly. And I'll be discussing some timing techniques or tricks that you can use in tomorrow's lesson, Wednesday's lesson, whenever we also too discuss the Fibonacci proportion that I tend to encounter within the formation of this specific pattern. So today's takeaways are, number 1, understanding the substructure. An ending diagonal is a 3, 3, 3, 3, 3 pattern, meaning each wave of a zigzag must again subdivide into a zigzag, not a flat, never a flat. It says so in the book. Number 1, wave 1 is going to be a zigzag, as are waves 2, 3, 4, and 5. Okay, overlap. You also want the right look. Okay, you want your 1, 3 and your 2, 4 trend lines to converge. Okay, and again, because it is a terminating wave pattern, whenever you see an ending diagonal, it's letting you know that the larger pattern, the larger Elliott wave structure forming, is nearing completion. And when it does, it tends to give way to a very soft, swift, sharp, volatile move back to beyond the origin of the pattern. Now, my first, real excitement, my first real encounter with an ending diagonal was actually going back several years. This would have been back in 2008. Now, again, I've encountered diagonals throughout my entire career. It is a bit of an uncommon pattern, okay? Impulse waves, we pretty much see those all the time. Diagonals, though, ending diagonals, they're probably like a 20% type of pattern. So out of whenever you're dealing with, say, 10 motive wave structures, 8 of them are going to be impulse waves. The other remaining 2 might be, say, the diagonal formation. So it's not a very common pattern, but they do occur, and again, especially at termination points, whenever the market is forming a top or whenever the market is forming a significant bottom. Now, the real big excitement I remember specifically when I was preparing today's lesson, what's a good example of an ending diagonal? And I can remember it was the Aussie dollar, and this would have been back in 2008 because a good friend of mine, a currency trader, we were working together and we were actually analyzing and trading this ending diagonal in the Aussie dollar market. And it was kind of an interesting move because it pretty much lasted about 6, 7 months. Okay, it started in January of 2008, and then we had our waves 1, 2, 3, 4, and 5. Notice the overlap. 3 is not longer than 1. You have your wave 2 pullback, your wave 4. Again, wave 4 ends in the price territory of wave 1. 5 is shorter than 3, 3 is shorter than 1. And then notice what occurred. And this is why the ending diagonal is such an exciting pattern, not just for Elliotticians, but also traders, because notice what occurred in the subsequent months. We went from 0.98 all the way down to 0.6. We almost actually saw the Aussie dollar get cut in half in the following the culmination of that pattern. So this is why the ending diagonal is such an exciting pattern, is because now, not always, don't misunderstand me, this is how we resolved to the downside in the Aussie dollar back in '08. This is not how all ending diagonals terminate, but it's a possibility. Again, this is part of the reason why the pattern is so exciting, because once it's complete, it gives way to a sharp reversal in price back to below the origin of the pattern, which is exactly what occurred in the Aussie dollar. I remember this example specifically because, again, I was working with a currency trader at the time, and we were very, very happy with the resolution, but also, too, the identification of this formation. What was kind of trying about this whole endeavor here, this whole campaign here, was that it took so long for the pattern to actually complete. And again, this is why confirming price action is so very important when it comes to the identification of a completed wave pattern. Now, you may be familiar with another ending diagonal that we've been working with, that I've been talking about the last few weeks in PayPal holdings. Now, as far as the bigger structure, I'm not really sure they say the designation or the placement of this ending diagonal. But again, going back to the rules and guidelines, there's only 2 places that three places where an ending diagonal can occur: the 5th wave position of an impulse wave, or as wave C of a zigzag or a flat. I don't think the larger pattern to the downside here in PayPal is a flat correction in any way. So that basically would argue that, okay, hey, this is wave A, that's wave B, this is wave C, or this is wave 3, that's wave 4, this is wave 5. But the cool thing about this one is, again, it is a very clean, clear ending diagonal. I am showing you some Fibonacci proportion on this specific slide. We're going to get a little bit more in depth regarding Fibonacci proportion in tomorrow's episode of Market Academy. But this is one where we were starting to talk about this, I believe, in November, late November, possibly. We were looking, again, for the upside, a significant move up as we trade into 2024. Because if everything goes according to plan, what we will see as we trade into 2024, maybe say June, July, we will see this advance continue to climb higher and higher. Maybe we'll see some gaps up along the way, who knows? But ultimately, the objective, the final destination for the advance that began back here, and this would have been back in November, is ultimately to beyond 103. And the reason we're looking for that, again, kind of goes back to the initial cover slide on what to expect following the completion of each one of these Elliott wave patterns. And when an ending diagonal is complete, the expectation is for a complete retracement, if not more, of the entirety of the pattern, just as you saw in the Aussie dollar, and what the expectation or what the forecast is in PayPal moving forward. So this is another slide you might be familiar with because, again, we were discussing this, and I was simply identifying some of the milestones along the way as prices advance. You have price resistance coming into play here. That was going to be the wave 4 extreme of the pattern. And then we have resistance again coming into play around wave 2, the wave 2 extreme. But again, ultimately, I will be looking for a complete retracement of this pattern, which is for prices to exceed the 103.03 level. So if we update our little price chart here as far as expectations, again, let's just go ahead and draw a straight line up. Now remember, we are going to have markets rarely move in a straight line, but along the way, as I expect PayPal to continue to climb back to beyond 100, we do have some areas on the price chart that could prompt a, say, temporary pause in price. Who knows? Maybe what happens here in PayPal is we climb up to this, say, 75 handle for wave 1, pull back in wave 2, then climb up to 90 or 95 in wave 3, pull back in wave 4. And then finally, we have 5 waves up, and the termination point of that final 5th wave move will be somewhere beyond that 103.03 handle. And this will be a fun stock to watch as we trade into 2024, because we're going to come back and reference this. We're going to, again, this is the fun thing I love about financial markets, and also, too, the weight principle. Once you come up with a forecast, it's actually kind of fun to follow it on a week-to-week basis to see if the price is actually indeed following the Elliott Wave roadmap we have in front of us. So as far as this week's lessons on ending diagonals, we're going to be talking a little bit more about Fibonacci proportion within the ending diagonal pattern tomorrow. Also, too, some timing techniques I use whenever I encounter an ending diagonal. And then on Thursday, I'm going to be discussing a variation of this pattern, which is the leading diagonal, and also, too, the expanded version of the ending diagonal. Well, that's about it for me for today. As always, thank you very much, and I'll see you tomorrow.